Welcome to the first Business Finance Bulletin of 2021. And in this first bulletin, I'll be looking at three important things to watch out during this year. First of all, the amount of debt that businesses have taken on. Secondly, the all-important issue of cash flow and also business investment appetite. All of this in the latest Business Finance Bulletin. Welcome again to this first Business Finance Bulletin of 2021. And what a start to the year it's been. We've got Brexit, everything that's going on in America, and obviously more lockdowns. All of this is really building up to make 2021 another interesting / challenging year. Now, the first segment I want to look at in this new edition of the Business Finance Bulletin for this year is debt, the amount of debt that businesses have taken on. Now, regular viewers and listeners to this bulletin and podcast will know throughout 2020, I was highlighting how much debt businesses have been taking on just to survive. Well, this has really been brought home to us now from a new review and survey undertaken by UK Finance, which is the umbrella organisation for most of the lenders in the UK, part of their quarterly business finance review. Now, the report has highlighted that in the first 3 quarters of 2020, businesses borrowed more than double the amount they borrowed in the whole of 2019. Yep, 3 quarters and borrowing more than double that they did in the previous year. In fact, businesses have taken on approximately £54 billion worth of debt in those first 3 quarters. If you look at quarter 2 and quarter 3, well, there businesses took on an extra £36 billion compared to the same quarters in 2019. So we can see businesses have been borrowing a huge slug of money. Also, you recall in November that the government allowed businesses to top up on their bounce back loans. So if you hadn't taken your full allocation, being a maximum of 50 grand and a maximum of 25% of your turnover, you could apply for a top up. Well, there, the UK Finance estimate that businesses have borrowed an additional £600 million just on that top up scheme alone. So what's the concern here? Well, of course, in good times, when businesses borrow money, it tends to be for investment. It kind of benefits the economy. But now, really, we got to say that most of the money that's been borrowed really is just to keep businesses afloat. So this is really down to this equation of good debt versus bad debt. Good debt, that adds income to your business. Bad debt, it saddles you with repayments for years to come. Now, there is a kind of a glimmer of hope here. The report also highlighted the fact that businesses are actually sitting on more cash than they have before. In fact, there's a 20% increase in quarter 1 compared to quarter 3 of the amount of cash that businesses are sitting on. £252 billion. It's an all-time high. So you can see that businesses have either been very conservative in spending their cash, and some cases they've been hoarding their bounce backs and C-bills loan cash as well. So at least we've got some buffer. The report also highlighted the fact that overdraft usage is down as well. Compared to the first quarter of 2020 versus the third quarter, businesses previously were utilising 54% of their overdraft limits. That was now down to 36% of their limits. So businesses have got a lot of headroom in terms of being able to access facilities via using their overdraft. So you combine that headroom together with cash deposits, the businesses are kind of sitting okay, but naturally there are many businesses which are now going to be struggling with the volume of debt burden that they're now taking on for this year. As ever, my advice, if you are facing troubles, take proper professional advice. Speak to your accountant or an insolvency practitioner. Don't go through troubled times alone. There are people who may help you kind of carve a new route out that will make you and your business safer in 2021. As we start 2021, that old adage about cash flow being king will never be truer. Cash flow really is the thing that keeps your business ticking along on a day-to-day basis. An interesting survey has been carried out by the British Chambers of Commerce. Now, once the survey and the report has been looking at kind of businesses' attitudes to 2021, no point in looking at that because guess what? Most businesses are feeling very pessimistic about their kind of future plans for this year. However, one aspect of the report I want want to look at is cash flow. Now, the report highlights that of the businesses that they surveyed, 43% of businesses have said that they have seen a deterioration in their cash flow. Now, cash flow is obviously made up of two things. Number one, if you haven't got the sales coming in, obviously cash flow is going to be very poor. But sometimes if you have got the sales coming in, cash flow is of course dependent on your customers actually paying you. So if you issue invoices on terms, giving customers 30, 60 or 90 days in which to pay, the fact that they may sit back and hoard the cash obviously has a negative impact on you. So with 43% of businesses saying that cash flow is deteriorating at the moment, it's a salutary reminder about the importance of keeping a very close eye on your cash flow. You should really be looking at forecasting your cash flow positions ahead, at least 3 months, if not 4 months on a rolling basis. There's nothing better than to sit down and force yourself to have a look at best case and worst case scenarios. It will allow you to plan ahead and not go rushing around for finance at the last minute. Access to finance in 2021 after Siebel's and bounce backs goes is probably going to be very challenging. So it's now really important that you sit down and plan ahead. Another aspect of this, of course, is about hoarding cash. Now, interestingly, some businesses are realizing that cash is king. So, for example, we helped a client this week who was looking to buy new machinery. Now, they had cash on their bank account, but they were smart enough to realize that perhaps they were better utilizing it via an asset finance facility, purchasing that equipment via HP and leasing. They've now put the repayment over 3 years and at the same time preserved cash in their bank account. When your bailiff comes knocking on the door, there's no point pointing to a machine in the corner. It's better to say, well, here's the cash, have the check now. Also, part of this report as well from the British Chambers of Commerce was business investment appetite. There, it's very clear that businesses are very pessimistic about business investment. They're really holding back and thinking we'd rather wait to see what the economy looks like going forward. So if you are thinking of investing in plant and machinery, say preserve your cash flow, think of investing via asset finance and HP facilities. You've really got to start gearing up because the economy will eventually improve and you don't want to be caught out by your competitors being ahead of the game. So think very carefully before you put aside your kind of investment plans in plant and equipment and machinery. You're better to be geared up, ready for when the uptick happens. And it certainly will be happening. Well, here we are at the end of the first bulletin of 2021. And as ever, if you did like it, please don't forget to give it a like, a share, and subscribe to this channel. So that's it. Look forward to being with you next time. In the meantime, have a safe, profitable, and healthy week.